2025年美联储首次降息终于到来了。据央视新闻报道，美联储宣布降息25个基点，符合市场预期。此番美联储降息是出于经济考量，还是迫于特朗普政府的压力呢？美联储放水是否利好新兴市场？我们一起来连线纽约联储前官员理查德·罗伯茨。Hello, Professor Roberts. Nice to meet you. The Fed just cut rates by 25 basis points, as widely expected. What's your immediate reaction to this decision?
At the highest level, I'd say that, the Fed, and Jerome Powell said this in his press conference, the Fed's balancing a tricky situation. There's sticky inflation that's still at near 3%, slightly over by some measures, on the other hand, there's some evidence that the labor market is weakening a little bit. So the central bank chose a modest 25 basis point cut instead of a 50 basis point cut that some were advocating. I'd say that 25 basis point cut is not a mistake, but it's not a victory either. Future moves from now until the end of the year, maybe into early 2026, will depend on not only the incoming data, which future moves by the Fed always depend on, but the new thing here is it'll also depend on political signals from the Trump administration, because President Trump has been applying, pretty severe rhetorical pressure on the Fed to cut interest rates. So that's kind of a new factor here. So we have the data that'll come in, and then we have the pressure from Trump. And those two things are going to guide, in my judgment, future Fed movements here through the end of the year anyway.
Given the major revision in the labor numbers, is 25 basis points really sufficient?
I think it is enough. We do not fully understand clearly what's going on with the labor market data. You're very correct in that the labor market data was revised downward through some benchmark revision process that happens annually, and the downward revision was quite large, possibly around 900,000 is my memory. But a fair amount of that is understandable and explainable, but there's another piece of that is confusing, and I don't feel like we have a good understanding of what caused it. So I think right now a 25 basis point cut is sufficient until we gain a better understanding of what's going on in the labor market. Are there major cracks in the labor market, or is this just a one-time data adjustment that is not particularly alarming?
Looking back to the beginning of the year, could you have foreseen the first rate cut coming in September?
Actually, I've stuck pretty consistent from late last year all through this year up until the labor market revisions. I didn't think the Federal Reserve was going to cut at all this year. And the reason I didn't think that was because of the inflation problem. Inflation has not returned to the Fed's target of 2%. And not only that, it shows some signs of increasing again. So I thought that the Federal Reserve would not cut interest rates until inflation subsided or decreased more and got closer to the 2% target. As I mentioned earlier, it's now around 3% core inflation, a little over by some measures. So I didn't think the Federal Reserve was going to cut, in the minority in thinking that. But having spent many years at the Fed, I have a good understanding of their thought processes. The new thing here, there's two new things going on that I think led to this cut today, although just 25 basis points. One is the labor market data. Previously, they were focused importantly on inflation because they said, well, the labor market, the full employment target, maximum employment, is the labor market is very strong. However, the recent revisions to the jobs data brings that into question. Maybe that job market is not as strong as the central bank was formerly thinking. Although, honestly, unemployment is still at a historic, anyway, low at 4.3%. It's been lower, but historically, that's a pretty low unemployment rate, although it has ticked up a little bit recently. And then the other piece that, folded in here, President Trump has really applied the pressure to influence the Federal Reserve's decision. He's actually appointed a number of key figures on the Federal Reserve's interest rate voting committee, the so-called FOMC. And then, as you know, he has consistently, President Trump, that has applied pressure in the public domain by criticizing Fed Chair Jerome Powell for being too slow to lower interest rates. And he's also attempted, although it's not clear this is related to Trump's interest in lowering interest rates, but he has pressured another Reserve Bank governor who votes, and that's Governor Lisa Cook. The Trump administration sought to remove Ms. Cook from the FOMC because of alleged mortgage fraud. And, most recently, the courts blocked that move to remove her off the FOMC. But nevertheless, it's another attempt. It may be another attempt, or some view it as another attempt by President Trump to influence the Federal Reserve, to have them start their rate cutting.
So can we still trust that the Fed will remain independent going forward?
It's a great question. I would say the Trump administration's influence is expected to continue shaping the Fed's policy decisions over the near term anyway, while President Trump is in office. So, there's potential for further rate cuts if economic conditions align with Trump's objectives. So I think over the near term, President Trump has his finger on the pulse of the Federal Reserve to kind of influence them a little bit. And I think we're going to see that influence over the near term.
You previously expressed that the inflation pressures were evident and that the Fed cuts in late 2024 might have been premature. Does today's move risk repeating the same mistake?
There's a risk of that for sure. I mean, there's a risk that, Federal Reserve easing at this point could further fuel inflationary pressures. And that's very painful and damaging to the U.S. economy. However, I don't think, 25 basis point cut is going to kick off inflationary pressures. The risk is very small from that small cut. However, it's what that 25 basis point cut portends or tells us about the future. Is this the beginning of the Fed's rate cutting cycle? And are we to expect additional rate cuts in the future? If we have a series of 25 or 50 basis point cuts between now and year end without a substantial weakening of the labor market, the Federal Reserve moving into very, very dangerous territory with these rate cuts. I mean, after all, economic growth is sound in the U.S. The economy, this quarter is probably growing maybe in the 2.5% to 3% range. Probably year over year will be around maybe 1.8% or 2%. So, it's growing well. The economy's okay, but inflation's high. And it's just that labor market data, number one, that's confusing people and influencing the Fed. And number two is, and this is the new piece, is, the influence of President Trump.
So how do you see recent the U.S. tariffs feeding into inflation dynamics? And does this complicate the Fed's task?
The tariffs, the data suggests, have, as we projected, have caused inflation. And this is kind of a textbook supply side tariff inflation causing episode here, where the supply curve shifts, inflation goes up, and the economy slows, kind of so-called stagflation. However, most feel that the impact of a tariff increase is just a one-time bump in inflation and not a permanent set of bumps. So I think what we're seeing in terms of the inflation possibly and hopefully is just a one-time bump, and we don't see additional inflation after that due to such things as retaliatory measures and things getting into wage price spirals and things like that. So the Trump tariffs have caused inflation, no doubt. We see it in the numbers, but hopefully it's just a one-time bump in inflation and it's not an ongoing. One way to judge the impact of the tariffs on inflation is to see what participants in the market expect for inflation. And the one concerning thing I see out there is, as a result of Trump's tariffs, is that inflation expectations still remain a little bit high and have increased a little bit. So we'll have to see. The news is still out on the impact of Trump tariffs on inflation.
How do you interpret the initial market reaction across stocks, bonds, and golds?
Bull market. There's bulls everywhere. Everywhere you look, there's bulls. This is a very, very interesting market, even risk assets. I very much expect, and I've said this a couple of times this year in presentations, that as soon as the Fed begins its loosening cycle, and this may be the beginning of it, as soon as the Fed turns the spigot on liquidity in world markets through, or in markets through lowering of interest rates, this is good news for certainly for risk assets, I suspect. And we'll continue, we'll see. I'd be very surprised if we don't see cryptocurrencies and so forth really take off now as a result. I think the overall trend will continue. It's not always a straight line, but yeah, I think, markets are very bullish right now, and it will take something important to happen to cause a stabilization or a pullback in markets. Something important that could happen is what I'm talking about here is this rekindling of inflation in a major way. So it's certain, we're trying to get it down to 2% from 8 or 9. It's come down and stabilized around 3 or around 3, but it now shows some signs of bumping up again. And if we have more inflation now because of interest rate cuts, right? I don't think 25 is going to do it, but additional cuts, this could be a problem that's really going to impact markets in a negative way. If we have another outbreak of inflation, not to 3.2 or 3.3%, but up over 4.5%, this is really going to take a toll on markets, and I suspect we'd see a rapid decline.
The dot plot signaled there will be 2 more rate cuts this year. Do you agree?
I think the rate cuts this year are going to depend on what's going on with the data. It's like what's happening with the data, and then what's going on with the Federal Reserve's pressure to lower rates. So if the inflation data comes down a bit, maybe in the neighborhood of 2.5 for core by year end, and we have continued labor market concerns, as some do now, I think for sure we're likely to see a couple additional cuts. However, if the inflation doesn't subside, and I don't think it's going to, honestly, but if it stays around 3% or continues to tick upwards, and we still have concerns with the labor market, normally the Federal Reserve would say, hold it, let's not cut again, let's just sit tight. Okay, inflation's picking back up a little bit. Nothing new on the downside has happened with the labor numbers, so let's pause here. However, that second factor that's important now is the pressure that the Trump administration has placed, both directly by appointing people, Mr. Moran, for example, and public comments and so forth. I think that would be enough to possibly cut again in the face of data that formerly the Federal Reserve would not cut for. We may see data at the end of the year that in previous times the Fed did not cut. They would have just said, hold on, inflation's up a little bit, the labor market's about the same, we're still a little concerned, let's just sit tight. But I think with the Trump influence now, if they see that combination, and it's very likely that we will see that combination, an uptick in inflation and labor market data that is about as concerning now as it's going to get. It's not going to worsen over the next quarter. I think that's what we'll see. I think there's a good chance that the Federal Reserve will continue to cut because of that influence of the Trump administration.
And how do you expect other major central banks, ECB, BOE, and in emerging markets to respond to the Fed's decision?
I think the future of emerging markets is strong and will remain strong. I think each major central bank kind of has their own set of data they're looking at, and we'll just have to see how the capital flows now as a result of the Federal Reserve's very small 25 basis point cut, which largely was already built into the market. So I wouldn't see any substantial change in the policies of other central banks because of the Federal Reserve's cut today, because everybody expected that. I think these central banks will continue to pay attention to the data that's important to them locally and react accordingly. So I don't think that small cut by the Federal Reserve today is going to be a major influencer of other major central banks, ECB, etc.
Does that mean we are not yet at the beginning of an easing cycle?
I think it's pretty safe to say that this could be the start of the cycle right here. The reason is because of President Trump's influence. He sways it. If that wasn't a factor, I'd say I can't say. It's too close because it may be one and done, if you will, and then they're going to have to pause and wait until they better understand things. But with the influence of President Trump now, I think that this very well may be, for better or worse, the start of a Federal Reserve easing cycle. And I'm very concerned about that. I think there's real dangers of starting the cycle and continuing it through year end and into next year. But I believe this is the start, and we're just going to have to be very mindful and nimble on our feet to the risks that could result as a result of premature cutting of interest rates. And that main risk that I'm worried about is, as I mentioned, a rekindling of inflation that does severe damage to the economy and causes major pullbacks in the values of assets that have been booming for a long time now.
All right, Professor Roberts, that's all for our interview. Bye. 尽管美联储已经开始降息，但是我们可以看到，包括美国经济在内的全球经济仍面临不少不确定性。投资者应该保持高度警惕，并理性地进行投资。